Good morning or good afternoon, depending on where you're joining us from. Welcome to today's webinar, which is going to be an Unemployment 101 session. My name is Nicole Korn, and I'm the Director of Unemployment Insurance Solutions here at 501, and I will be your presenter today. Couple housekeeping items before we get started. There is a copy of the presentation located in the resources section of the the webinar toolbar. However, you will get a copy of the slides after the webinar as well. Also, I'm going to leave everybody on mute just to keep down any background noise or distractions. But if you have a question, feel free to type it in the Q&A box, and I'd be happy to stop periodically throughout the webinar to try to address those. If you have very specific questions, write down my email address, and maybe we can address those offline as well. And then also, if you're here for the continuing HR credits, education credits, such as the SHRM or HRCI credits, all you need to do is fill out the survey that you're going to receive after the webinar, and then give us about 24 hours, and we'll send you those codes. All right, so let's review the agenda. So first, we're going to cover a brief history of unemployment. I promise to do this as quickly as possible, but we just need to give you some foundations of how the program was created. And then we'll talk about chargeability and liability. Then we'll move on to the types of separations and some adjudication strategies, as well as some tips for appeals and hearings. All right, so unemployment actually all began with the Great Depression. So in 1929, the US financial institutions collapsed and many companies laid off workers, and this caused the unemployment rate to skyrocket to over 20% nationwide. And so it was this event that prompted our government to try to find means to provide relief to these impacted individuals who had lost their livelihood. So on August 14th, 1935, President Roosevelt signed the Social Security Act. And so that act contained provisions for elderly insurance, welfare, and unemployment insurance. So the unemployment program is federally mandated. However, the individual states can administer the program however they wish, as long as they meet 4 federal requirements. So the first federal requirement is the replacement of lost wages. And the objective here is to protect workers from a temporary loss of wages, and also to replace only a portion of a worker's earnings. So for example, if you make $1,000 a week while you're employed and you get laid off, you're not going to make $1,000 a week in unemployment. It's usually somewhere to about 50 to 60% up to whatever the maximum threshold is in your state. And this is in part to provide an incentive to that unemployed worker to return to the workforce. The second federal requirement the states have to meet is stabilization of national employment. And so the objective here actually is to create an incentive to the employer to retain their workforce by taxing them or charging them on their prior unemployment experience. So if an employer has a high level of chargeable claims against their account, their tax rate is going to be higher than a company with little unemployment activity. And this is, of course, slightly different for nonprofit employers that are exempt from those taxes, but the principle is the same. There's a financial impact for not retaining your workforce. Third federal requirement is stabilization of national economy. And so obviously the objective here is just to retain some of the consumer purchasing power by replacing some of those funds. So obviously if someone has no money coming into their household, they're not spending any money out in the economy. So this is to help with that objective. And then the fourth one is job placement. And this is actually why the unemployment agencies are the primary job placement bureaus in America. So outside of these 4 federal requirements, each state administers their own unemployment program within these guidelines. And this is why regulations regarding eligibility, weekly benefit amounts, the length of time that someone can collect can and will vary by state. However, when it comes to eligibility, there are 5 criteria that is consistent in every state. In order to be eligible to collect unemployment benefits, you must be physically able to perform some kind of work. You have to be available to work. So you can't be in school full time or, drawing benefits while you're vacationing in Europe. You have to be actively seeking work. So this is why when you're collecting unemployment, the states will ask you to send in your job searching activities and proof that you've been looking for work. You have to meet the state's monetary requirements. So that means that you had to have worked long enough to have earned enough credits to be eligible for the program. There's also a current component to that. So those that might be requesting partial benefits, if they're actively still working but their hours have been reduced, they have to be making under a certain amount. So those are the monetary requirements. And then last but not least, you have to be unemployed through no fault of your own. And this part is highly subjective, and the part where the employer really plays the biggest role. So more on that when we talk about the different types of separations and adjudication strategies. So since 1935, unemployment really hadn't changed much. And that was until President Obama passed the Trade Adjustment Assistance Extension Act of 2011. This was major legislation and resulted in new regulations to promote unemployment insurance integrity. These new regulations went into effect in 2014 and changed the way that employers need to view their role in the unemployment process. So previously or historically, employers made a choice between responding or not responding to unemployment claims, and they would often only respond if it was their wish to have benefits denied. However, moving forward, employers are actually required to respond to all claims to remain in compliance and avoid potential financial penalties. The federal legislation stipulated that the state unemployment agencies must prohibit relieving an employer of charges when both of the following conditions exist. So number one, if unemployment benefits were improperly paid due to the failure of the employer to respond timely or adequately to the state's request for information. And number two, if the employer has established a pattern of failing to respond timely or adequately. So what does this mean exactly? And by the way, what's a pattern? So it's not very much, right? A pattern is usually either 2 or more instances in a year or 2% of the claims that you had in the past year. So if you have established this pattern of not responding timely and adequately, there are some consequences for that. So what does this mean exactly? Well, prior to 2014, employers could just send a very generic response to an unemployment claim, or maybe not one at all, depending. And if the person was awarded benefits, they could still appeal it and then put the effort in to gather all the details and supporting documents for the hearing. And then if they were successful at getting the decision overturned at the hearing, the state would then owe the money back to the employer, regardless of whose fault it was in the state making an incorrect decision. Now, post 2014, the states are required to deny the reimbursement of those improper payments if the employer has a pattern of doing this. Now, they may stop paying benefits going forward as of the hearing decision, but you will not get any of the money back that has already been paid out. And if you think about it, these rules are actually beneficial for all parties involved. So if you provide the necessary details and documentation up front, the state will make a better initial decision, which then will result in less appeals and less hearings for both you and the claimant to have to participate in. And the states are less likely to become insolvent because there will be less improper payments being made. And think about it like this: an individual could collect thousands of dollars by the time a claim gets to the hearing. So if you wait till the hearing to provide all of that necessary detail and documentation that would have initially disqualified the person, well, now the state has to go and try to collect that money back from an individual who is not employed, right? And in most states, the employer doesn't get their money back until the state gets the money back. And I have seen it take 5 to 7 years for those credits to come in. So it really is in your best interest to respond to all unemployment claims timely and adequately. And the reality is, it's not even really about protesting. It's about the state wants to know what happened in the scenario, in the separation, so that they can apply the state rules and regulations. It's not really your decision as the employer whether someone should get benefits or not. There are laws, right? And so the state just wants to understand both sides of the story so that they can make an accurate and informed decision. All right, so let's talk about funding. Unemployment claims are 100% funded by employers, either through taxes or direct reimbursement. It is not uncommon for people to believe that they pay into unemployment and it's a benefit or an entitlement that they're owed. But this is actually not the case at all. Now, there are 3 states that do require a small employee contribution that they might see on their paycheck, and that's New Jersey, Pennsylvania, and Alaska. However, these contributions are very small and they go directly to the state for the cost of administering the unemployment program, and they do not contribute to the funding of unemployment benefits. They are 100% financed by employers. So when it comes to funding the benefits, there's 2 types of employers. You could be a merit-rated employer, which is also known as tax-paying, or you could be a reimbursing employer, or also known as self-insured. So merit-rated employers could be a for-profit or a nonprofit employer. They're going to be issued a tax rate every year in each state that they have employees in. And then that rate is going to be applied to a wage base that varies by state. So let's walk through an example. We'll use Oregon. So the 2025 taxable wage base in the state of Oregon is $54,300, and you could be assigned a rate all the way up to 5.4%. So let's just say that your assigned rate in 2025 is 4%. That means you're going to pay 4% on the first $54,300 that every employee makes. So that's 2,000. So that's $2,172 per employee. Let's say you have 100 employees. That means you're going to pay $217,200 to the state in unemployment taxes for that year, regardless of whether you've had a single unemployment claim. So even if you don't separate anyone or no one files a chargeable claim against you that year, you're going to pay that money. It's like any other insurance program. If you don't use it, you lose it, right? Now your taxes may go down the next year a little bit, but you're never going to get a refund for the money that you didn't use. And when determining your rate each year, there is a lot of socialized costs that are associated with it. So it's not just your own unemployment usage that could be impacting your rate. You could be doing great, but if other employers in your state are not, your rates could go up just simply due to that. So there are employer factors and there are economic factors. Plus, most states are going to use a look back period of 3 to 5 years to determine your rate. And so one bad year could affect your rate for many years after. So the next type of employer is self-insured or reimbursing, and that should probably apply to everybody on today's call. In order to be eligible to reimburse or self-insure, you have to be either a 501c3 nonprofit organization, a government agency, or a tribal organization. Being a reimburser can be particularly advantageous for several reasons. You're going to pay only for actual benefit payments issued. You will avoid increased tax liability due to an unfavorable economy, and you will avoid those tax assessments or socialized costs. And I know that during the pandemic, it was very scary for nonprofits who were reimbursing. But thankfully, we did get relief like the CARES Act and things of that nature. And once the pandemic was over, everything reverted back to normal, right? So with the tax-paying employers, we're still seeing tax increases as a result of the pandemic because the states have to refill those coffers at a higher rate in which they were paid out, right? Well, unemployment post-pandemic was at all-time historical lows, lower than I've ever seen them. And they're still low. It's still pretty low. We're now kind of back to maybe about where we were in 2019. But reimbursers are enjoying that relief and the fact that they only have to pay for what they are using. I'm not going to say that reimbursing is right for every nonprofit organization. Of course, it is going to depend on your size, your state wage base, your average turnover, things of that nature. But this is something to consider when thinking about your unemployment expenses. Okay, so I like this slide because I think it's kind of really illustrates why it's important to manage unemployment expenses if where you can. So most studies that attempt to quantify the cost of turnover usually use the formula of the cost of hiring plus the cost of training a new employee, but very rarely do they consider the cost of an unemployment claim. And they should, because it is a very real expense. It directly impacts an employer's bottom line. So I like to show sort of the state by state. You can see how much they vary depending on what state you're in, but these are the maximum weekly benefit amounts and the maximum number of weeks that someone can collect in any given state. So like look at the state of Washington. One unemployment claim could cost you almost $30,000. So that is why it is important to control these costs where we can. Okay, so now we're going to talk about chargeability and liability. One of the most common questions that I hear is, why are we responsible for this claim? Or how much am I going to have to pay on this person's benefits? So let's talk about how the state does this. So the first thing that the state will do when someone files a claim is they're going to determine something called the base period. So the base period is going to be the first four of the last five completed quarters. Now, there, of course, are always exceptions. So Massachusetts and Minnesota use the last four completed quarters. But the rest of the states all use the first four of the last five completed quarters. So looking at this chart here with the shaded boxes and the arrows pointing. So the box on the far right that is not shaded where the arrow is pointing, that would be your filing quarter. So we are in the month of August. So that's the third box down on the right there. So if someone files in the month of August, which is the third quarter, we're in an active quarter, it's not completed. So the base period is going to be the first four of the last five completed quarters. So that is why the box to the left is blank, because Q2 is the lag quarter. It does not count in the base period. So it would be the four preceding quarters to that. So if someone were to file today, their base period is going to be April of 2024 through March of 2025. Now, it might seem a little like complicated, and you might be thinking, well, it sounds like Massachusetts and Minnesota do this a whole lot easier. Like, why not just make it the last four completed quarters? That just seems a lot easier. There's actually a really good reason for this. Every employer has roughly 30 to 45 days after the quarter ends to submit their quarterly payroll reports to the unemployment offices. And so if someone files really early in a quarter, they're not going to have the information yet for that last quarter. So in states like Massachusetts and Minnesota, where they use the last four, so if someone were to file right now in the month of August, they're not going to have the wages yet for last quarter because they're not due. And so what they do then is they send out this really annoying and cumbersome wage questionnaire to the employer that they have to fill out. So it really does make sense to have that lag quarter. And so using the first four of the last five completed quarters makes total sense. And that's why they do it. So what is the purpose of the base period? There are four things that the base period is going to tell the state. It's going to tell them, has the claimant met the minimum wage requirement? So they're going to look at all wages reported during the base period. Then it's going to tell them, how much is the claimant eligible to collect and for how long? It's then going to tell them which employers will receive a claim and what type they will receive. And it's going to tell the state, if the claimant is found eligible for benefits, how much is each employer going to pay? So the base period is completely crucial to an unemployment claim and is the starting point for everything. So let's walk through a specific example of how they do this. So this graphic here is just a different way of looking at the base period. But in looking at this, you'll see that there's three companies involved in this claim. Okay, so we've got the base period, the lag quarter, then you've got the filing quarter here. And so below that, you'll see there's company A, company B, and company C. So company A is going to be the last employer and the base period employer, right? They're the most recent employer before the person filed, but they also have some wages back here in the base period. Company B is going to be a base period employer only, and company C is also going to be a base period employer only. So that means that company A is going to receive a last employer claim, which is used to determine an individual's eligibility based on their reason for separation, their most recent separation. So only company A will get a last employer claim. But company A will also receive a base period notice because they have wages in the base period. And the base period notice is going to address the financial liability. Okay, so the last employer claim determines eligibility based on separation, but the base period claim is only determining financial liability. Now, companies B and C are only going to receive a base period notice, letting them know that they will have liability and will be charged their share if the claimant is found eligible based on their reason for separation from their most recent employer. Base period claims are typically not protestable in most states. There are some exceptions, of course, and I have those on another slide. But in most states, if you're not the separating employer and you are self-insured, you don't pay the taxes, you cannot protest when you're not the last employer. Here's why. So if someone leaves your organization and they voluntarily quit to maybe take another job somewhere else, and they go and they work for this other employer, and then 6 months later, that new employer lays them off, right? This is at no fault of their own. And so the state is going to award them benefits because the scenario that prompted them to file the claim was a qualifying event. They were laid off. And the states that charge proportionately, like in this graphic, every employer has to pay their share of that claim. And when you're a tax-paying employer, we talked about all those socialized fees and costs and things that go into that. And so there's pooled funds there. And so when you're a tax-paying employer, you can protest when you're not the last employer, and they will remove that claim. You know, if the person voluntarily quit, perhaps they will remove that claim from being charged against your experience rating because you have money sitting in this pooled fund that you've paid into all these years that can be used to still fund the benefit. So this person's still going to collect either way. It's just whether or not it gets charged to you or to your experience rating. Whereas nonprofits who are self-insured, they don't pay those taxes. There's no pooled fund to pull from. So you have to pay your share in the majority of states. Now, in this example, the wages that were reported by these three employers totaled $50,000. So if the claimant is found eligible, their weekly benefit amount will be somewhere around $480 a week, give or take, depending on the state. Now, 36 of the 50 states charge proportionately based on the percentage of the wages that you paid as the employer. So in this example, if the claimant's found eligible, so say they're laid off from their most recent employer and they're found eligible from their last employer, each of these employers are going to pay their share based on the way or the percentage that they paid. So company A paid $5,000 of the $50,000 or 10%. So company A would be responsible for $48 per week of the 480. Company B paid $20,000 of the total base period wages and therefore would be responsible for 40% of the benefits or $192 per week of the 480. And company C pays $240 a week or 50% because they were responsible for 50% of the wages that created, that totaled their eligibility. Now, again, 36 states charge this way. We can't go over through every state exception. This is supposed to be a high-level overview, but I will tell you that the other ways that states charge is usually going to be either inverse chronological order. So I know like Iowa and I think Massachusetts charge this way. This is where what they'll do is they'll still determine the amount and the percentages using the base period wages. So in this example, $480. But the way that they would charge is they would start charging the most recent employer first, until they hit their max liability. And if the person hasn't gone back to work after they've hit their max, then they'll go on to company B, and then they'll move on to company C. So company A has, $48 a week times, well, we'll use Massachusetts. Right now you can collect 30 weeks in Massachusetts. So $30, right? $1,440 is going to be their max liability. So they would charge company A $480 a week until they hit that $1,440, and then they would move on to company B. So that's how inverse chronological order works. And then you've got states like Illinois that charge the last 30-day employer. So in that example, company A, basically, okay, so it's the last 30-day employer if they also had wages in the base period. So in this example, that would be company A. They're the last 30-day employer and they also have wages in the base period. Company A would pay 100% of the benefits. And actually, to me, that seems to make the most sense. I don't know why all states don't do it that way, since they're the one that laid the employee off. But anyway, they would pay the full amount of the benefits. Now, in this type of state, if they are the last 30-day employer, but they haven't worked long enough to have wages back in that base period, so maybe it only extends into the lag period, they would pay 50% of the benefits, and then the state would actually cover the other 50%. So those are the main three ways that states determine and charge employers. I said there were some exceptions about those base period claims when you're not the last employer, so I'm not going to go through them specifically. You can see I've got 2 slides here. You're going to get a copy of the presentation. You can look through, see if your state is on here. But there are some states that do allow protests under certain scenarios. So states like Colorado and Iowa allow nonprofits to protest all base period claims. But then there are other states like New Jersey, for example, if it's gross misconduct, violence, theft, pardon me, fraud, then you can try to protest under gross misconduct. But like if they voluntarily quit, no dice. And then you've got states like Pennsylvania that have this interesting thing called a solvency fee. So every year you'll get a notice from the state if you're in Pennsylvania and you're a reimburser that says, hey, if you pay this one-time fee, next year you'll have the right to protest base period claims that are eligible for protest, right? So still not lack of work or something like that. But if it was like a voluntary quit or a discharge, you could actually protest those base period claims if you're not the last employer, if you pay the solvency fee, because you've essentially pulled some money, you've put some money into a pot that would pay their benefits. So it kind of makes you like a tax-paying employer, but you really have to evaluate each year whether that fee makes sense, depending on how your claims typically fall and what types of separation reasons you typically have. It may not make sense to pay that fee for your organization. All right, so I'm going to take a quick pause. We've got some questions in the Q&A box. Okay, what is the definition of timely? We recently received a request that recently gave us less than 24 hours to provide extra information after we already responded to 2-3 prior requests. Yes, so that is a great question. That's what we call a state call or a deputy call. And depending on your state, they only give you 24 to 48 hours. And it's annoying. I totally get that. Timely means whatever the state dictates as the deadline. So, and that ranges based on form type, request type, and state. So some states give you 4 days from the date of mailing, which is ridiculous, because we all know the postal service these days, it's not great. It takes a really long time for things to get places, which is why SIDES is a great thing. Most states are now on electronic transmission to our claims administrator, but not every form goes that way. So anyway, so some states is like 4 days, some states it's 10. It really varies, but those follow-up requests known as state calls, yes, you only get 24 to 48 hours. Usually that's going to be clarification on an issue, a rebuttal to something maybe the claimant said, maybe the facts are in conflict. It's in your best interest to try to respond to those, but I will tell you that you're not going to be flagged. I don't think you're going to be flagged as a non-compliant employer if you can't get back to them, as long as you've provided the documentation that we're going to cover in the separate types of separations here in a minute. As long as you cover the basic stuff that the state is looking for and you did it by their original timelines, you should be considered in compliant and timely with their requests. Question about base period. What if there is a drastic difference in the wages paid by each employer? How is the base salary calculated then? So I think you might have posted that before I went through that. But yeah, that it's literally based on the percentage. So if one employer paid 90% of the base period wages, they're going to get 90% of the charges when you're in a proportional state. So that's how that works. It doesn't always seem fair, and I totally get that. All right, so let's talk about the types of separations. And so I want to kind of preface this with, we're going to talk about some best practices, right? We're going to talk about how the state adjudicates claims, what they're looking for, what you can be doing to control the claims that you can control. You cannot control all claims, right? So we're just looking for best practices to control the ones that you can. And the reality is that unemployment is not black and white. It is extremely gray. Every single detail matters, and it can shift a decision one way or another. And I'm going to kind of go through some of those scenarios so that you can get a good idea of what we're talking about. But the best time to win an unemployment claim is before it's ever filed, right? You should be capturing the right information in that personnel file. You should be having the appropriate documentation trails. So that's what we're going to talk about, so that when that claim comes in, you've got everything that you need to submit so that you can win the claims that you should be winning based on the unemployment laws and regulations. Okay, so there are three types of job separations recognized in unemployment adjudication, and every single separation is going to fall into one of these three buckets. So the type of separation in which bucket it falls in is then going to dictate the flow of how the claim is adjudicated and who has the burden of proof on the claim. The state is going to determine which bucket by looking at factors such as who was the moving party that initiated separation. They're also going to look at, was continuing work available? So the first bucket that a claim could fall in is a discharge. And we all know the obvious ones, like, okay, they violated a policy, there was gross misconduct. But the ones that you may not realize that are going to fall into discharge would be suspensions. So if you suspend someone, you as the employer are initiating a separation from work, and therefore it's going to be adjudicated like a discharge, even though they're not actually discharged yet. Mutual agreements, that's the whole, it's just not working out. Maybe we let you quit instead of firing you. Guess what? That's a discharge. The state doesn't care how you code it in your HRIS system. They care about the details. And at the end of the day, if that person hadn't quit, you were going to fire them anyways. It's a discharge. The next category that claims could fall into would be voluntary. So that would be your obvious resignations, or maybe they just abandon their job and they just never come back. But leave of absences, those are actually going to be adjudicated as a voluntary quit. And the reason being is that typically when there's a leave of absence, the employee has initiated that separation from work, and therefore it will be considered voluntary, and then thus will go that way. Then you've got, pardon me, lack of work. So things that might be lack of work are your obvious layoffs or position eliminated, staff reductions. We all get that. But the other ones that you may not realize, seasonal work, temporary assignments, contract assignments, reduced hours, some part-time work, right? Those things can all fall into lack of work. So now we're going to go into each of these three in a deeper dive. So let's first talk about discharges. So when it comes to a discharge, the burden of proof is going to be your responsibility, okay, as the employer, because you initiated the separation from work. Earlier, we discussed that unemployment is for individuals who find themselves unemployed at no fault of their own. In the case of a discharge, the employer will need to prove that the employee was separated for misconduct in order to be relieved of charges. The states generally define misconduct as a deliberate and willful disregard of an employer's interest or repeated violations of a known company policy. So keep in mind, it is very possible for an employee to be discharged for cause or even good cause and it still not meet the state's definition of misconduct. So in essence, you could have made a good, solid business decision according to your policies to separate the employee, yet they may still qualify for unemployment. So first, I will say, don't panic. They're not saying, the state is not saying that you discharge the employee inappropriately. They are just saying it doesn't meet unemployment law definition of misconduct. So what I want to do is I want to walk through some of the discharges that are generally not considered misconduct. It's going to really depend on the details. So I want to walk through some of those examples. So the first one I want to talk about is an isolated incident. So if an individual is terminated for a policy violation, but they don't have any prior warnings for a similar infraction, the state is typically going to rule it as an isolated incident of poor judgment. Now, of course, this is provided that the incident was not gross misconduct. That wouldn't require prior warnings, right? But if it's just your general policy violation, the state is generally going to want to see at least one prior warning for a similar issue. So why this is a problem sometimes for employers is that a lot of employers have what we call progressive discipline policies. And so usually that means if you get so many coachings or warnings, whatever you want to call them, within a particular time frame, and then you get so many and you exceed the limit, you have to be discharged. And that's a good policy. Most employers have a policy like that. But unfortunately, if the final incident that occurred that resulted in their separation isn't gross misconduct, and it doesn't align with anything that they've been warned about previously, the state could rule it as an isolated incident of poor judgment. So, for example, if say you had a verbal warning for their, dress code or not wearing the uniform, and maybe they had a written warning for attendance and a final warning for attendance, but then the final incident that resulted in termination was, being on social media on the company computer, I don't know, something like that, right? That wouldn't be gross misconduct, and the state could easily rule that last infraction as an isolated incident of poor judgment because they'd never been told before, hey, if you do this one more time, you could be terminated. Another one that's similar but a little different would be like a good faith error. So this would be, something where the employee did violate a policy, but maybe they were doing what they thought was in the best interest of the company. So I want to walk through some examples. I used to handle claims way back at the beginning of my career for a very popular discount retailer that we would all know. And they had very strict rules regarding meal break violations, and for good reason. They don't want to break the law, they don't want to be fined. And so if employees were repeatedly not taking their meal breaks properly or something to that effect, they could get discharged. Now, if someone, on the day of their discharge didn't take their meal break and their reason was, hey, there was a line out the door. We were shorthanded that day. There was no one to wait on the customers. I was doing what I thought needed to be done to serve the company and to get these customers checked out or whatever the case may be, right? The state could very easily say, you know what, we get it. It's against your policy. We understand you have to terminate them, but they were doing what they thought was in the best company or best interest of the company. They weren't trying to hurt you. They were trying to help you, right? Now, on the flip side, if during this coaching process, or if you had ever talked to them about this before, because it maybe had come up, and you had given them some strategies for how to handle that scenario. Maybe you said, hey, if this ever happens, here's what you do. If you're getting close to your meal break time, maybe call a supervisor to the desk, or here's how you handle this. If you have given them strategies to combat this and then they don't use those strategies, now you could flip that to misconduct because they didn't follow the procedures that you gave them. So you can see how easily it goes from one scenario to another. Another one that is super frustrating, but is sometimes very hard to win depending on the state, your particular state, would be attendance. So if the person, if their final absence was beyond their control, so they're sick, their child was sick, somebody, rear-ended them and sent them to the hospital on their way to work, anything that would be beyond their control, the state could rule that as no misconduct. It's very, very common. It just depends. Um, the reality is, did they follow the policies? Did they properly report the absences? And was the final absence within their control? So if someone has, proceeded, they've gone through the coaching process, they've had warnings, they're at that final stage, they call in, or they're sick, but let's say they didn't call in per the policy. Maybe your policy says you've got to notify your direct supervisor at least 15 minutes before your shift starts. And maybe they don't call till an hour after their shift starts, or maybe they texted their coworker and said, "Hey, can you let Bob know I'm not going to make it in today? I'm sick." Right? That would be a policy violation, and you could protest based on their lack of respect for the policy itself. However, if they called in properly, reported the absence, said they were sick, you're going to have a hard time winning in most states, right? The best thing, though, that you can do is have a very unambiguous policy, a points related policy that there's no room for error, that says, look, this is the rule. Once you accumulate this many, you're done, right? If you're in a state that looks at that, that's going to help you, because they're going to say that you're not applying the rules differently amongst different employees. So where we often find trouble is that sometimes employers think that they're, being kind and generous, and maybe they allow employees to go beyond the standard number. Maybe Fred got 10 absences, but Julie got 14, because Julie was a really good employee and maybe she was just going through a hard time. And so you let Julie exceed whatever the policy was, but Fred got terminated based on the rules. The state does not look at that kindly. They actually are going to hold that against you. You've got to make sure you're following your policies. They need to be very clear. Otherwise, they're going to assume that the employee wouldn't know what's expected of them, right? If you're not uniformly enforcing those policies. So what I would say on attendance is, the reason for the absence matters. So you should ask. If someone calls in, they should be able to provide a reason for why they're not coming to work. That's not invading their privacy. You should be able to ask. You should document it. The state will ask what those reasons were. You should have a clear policy. You should document everything. And then you should provide all of that, copies of prior warnings, your policy, all of that at that initial level. If the state comes back and says, okay, granted, Susie did violate the policy, we understand that. However, her final absence was for illness. She did properly report it. Therefore, it's not her fault. It's beyond her control. No misconduct. At that point, you need to let it go. There's no reason to take that to an unemployment hearing, because you're not going to change the state's laws. Now, if the facts are in conflict, so you've got a story, the employee's got a story, and when the decision comes back, it doesn't align with what really happened, and you feel that there was preventable issues or misconduct, then by all means, you should absolutely take that case to a hearing. But just know that attendance is hard to win. So I say always provide everything up front. Let the state decide. If they rule it no misconduct and the facts are not conflicting, let it go. All right, so let's talk about poor performance. So this one gets a slide all of its own. One of the more confusing, if not controversial, separation issues surrounds a worker who is discharged due to poor performance issues. But a very easy way to think about this is wouldn't versus couldn't. So the worker wouldn't do the job appropriately, or they couldn't do the job appropriately. The state feels that it is an employer's responsibility to choose a qualified person for the job. And warnings will not make a performance issue misconduct. If the employee has never been able to meet the performance standards of the job since they were hired, it will be deemed as inability to perform the job, and they will be allowed unemployment benefits. Okay. Now, there are situations where you have a worker who has been performing at acceptable levels and then for whatever reason develops performance issues. This is a different issue. If the worker's duties, job duties and responsibilities have not changed, like he didn't just get a promotion or something, And you can show that through prior performance evaluations that this individual has historically been able to perform the job at acceptable levels for a reasonable period of time, this could be considered misconduct. The key is going to be to prove that the individual has the ability and is, for whatever reason, is choosing not to perform at acceptable levels. Now, I would actually argue that in this situation, it is best not to present it as performance at all. So what I can tell you is all too often, if a state adjudicator sees the word poor performance or unsatisfactory work performance, they immediately close their mind, open the checkbook. So I would not even position it that way at all. Um, we talked about the state not caring what it says in your HRIS system. What happens is a lot of times poor performance is sort of used as a catch-all. Maybe your system doesn't have a lot of codes to choose from. And so poor performance is the only thing that fits. Or maybe you just don't really know, you don't have a specific policy to apply it to, so you just call it poor performance. This is a very common thing. But what I can tell you is when it comes time for the unemployment claim, if you feel there was misconduct, find another way to approach it. The best thing you can do is to focus on the final incident, whatever that straw was that broke the camel's back. The thing that made you decide to terminate them, and focus on that. Was there a policy violated? If there was, position it that way, then provide the prior coachings and go that route. Do not call it a performance issue. If you can't nail down a specific policy for whatever reason, or maybe it seems too vague, okay, then maybe call it deliberate unsatisfactory performance or misconduct related performance. There are ways that you can get those key terms across that will tell the state that you are suggesting that this was not an inability to do the job, but a purposeful act on behalf of the employee. So let me give you an example to illustrate the difference of a separation that in one scenario might be misconduct versus in another scenario, poor performance. So let's say you hire an employee and their job involves sometimes driving a company vehicle. And you have a policy stating that a certain number of accidents will result in termination. Makes total sense, right? It doesn't matter how many accidents this person might have, as you could probably never prove that someone intentionally ran into another car or a light post or whatever. That person is just not a very good driver. Now, on the flip side, if that employee was texting while driving, maybe they took some cough syrup for a cold and they were tired and fell asleep behind the wheel. Maybe they were under the influence. Maybe they were talking on their cell phone and they were distracted. Now you have misconduct. The key in that situation is not to focus on the policy violated that, oh, they had too many car accidents. You need to focus on the policy that was violated that caused the accident. The employee was doing something that was wrong that caused them to crash the car, right? Not that they're just a bad driver. If you hire somebody that's not a good driver, they just don't have the skills to perform the job. So you can kind of see the difference there. The other thing, right, is the key terms. And I kind of mentioned this already, but I want to give you an exact example. I worked with another employer a while back that part of their business was a call center. And so one of the things that they would often terminate employees for was something called call avoidance. And that means that basically they're not doing their job, right? They work in a call center, they're avoiding incoming calls, they're not doing their job. Now, in this scenario, what happened was that the employer actually won the case, the claim initially. So they protested, said it was call avoidance, provided the policy, the final incident, all of that. State came back and said they were denied benefits. The employee, former employee, appealed it and it went to a hearing. And when the hearing decision came back, the state overturned it in the employee's favor. And I will never forget it. And this was probably 15 years ago. They said, by the employer's own admission, the claimant's, quote, mistake was staying away from the phone too long. So it went from Johnny was deliberately avoiding incoming calls, thus, violating our policies and his job duties, versus, oopsie, Johnny forgot to answer the phone. And I know that sounds kind of silly, But that is exactly how the state makes these determinations, right? They're trying to determine intent and motive behind everything. Was it intentional or was it unintentional? And that's what you're trying to prove. So the key terms that you use 100% matter when it comes to an unemployment claim. So use the words that describe the situation accurately as best as you can. And the last thing I'm going to say about unsatisfactory work performance, and I can only make this recommendation, you can do what you want, but if you identify early on that someone's not going to be physically or mentally able to perform the duties for which they were hired, it's really best to separate them as quickly as possible. So here's why. Now, we talked about that base period, and if you separate somebody very quickly upon hire, there's a really good chance that you're not even a chargeable employer yet, right? You may not even have any wages. So like if you're in a proportional state and you get a last employer claim only, so not a base period, you're not chargeable, and you say that it was, inability to perform the job, you discharged them during the probationary period or whatever, they're going to be eligible for benefits, but you're not going to be charged because you don't have any liability. You're not in that base period. Now, if you're in a last 30-day employer state, and you had them more than 30 days, you might have you might have liability, but if you don't have any wages in that base period yet, you might only get 50%. So what I'm saying is it really does reduce your liability, and, it allows you to hire someone more quickly that will be able to do the job. So it's really best not to let these issues fester from a financial liability standpoint. If you know it's not going to work out, it's best to just move on and let them collect unemployment and move on to someone who can perform the job. So let's talk about, for discharges, what is effective and compliant documentation. And I've kind of already touched on some of these things, but I want to really sort of summarize it for you. Dates of employment are a given. That's going to be regardless of the separation, so I don't even include that on here, but dates of employment, obviously. But the first thing in a discharge that you want to provide are the date and specific details of the final incident, okay? Very specifically, what made you decide to terminate the employee, okay? Not a paragraph about every horrible thing and why this person was such a terrible employee. Do not do that. Final incident only. Then you want to say, here was the policy that we are applying to this scenario. This is the policy we used in determining that this person should be discharged. Then you're going to need to provide proof that the employee should have been aware of the policies. So you don't have to prove that they read them all, but like if you have a handbook acknowledgement that they signed, or maybe they did like an online acknowledgement, however you can show that this person should have been made aware of these company policies, that's what you want to offer. And then last, prior corrective action or warnings. Now, this is where you get to provide the historical aspect of everything that led up to the final incident. This is where you get to show the full scope of everything that occurred and, kind of give them the full picture. Now, witness statements, I put that on here, but I'm going to warn you about witness statements. So be very careful with these. Anything that you submit for an unemployment case is going to be public record to the claimant. So the claimant will be able to see everything that you've submitted. So if you're worried about retaliation or some sort of, revenge situation, it is not a good idea to provide witness statements because the claimant will get to see them. Redacted witness statements, first of all, are useless. The state, if you can't see the name of the witness, they're not going to even give it any credibility at all. It'll be secondhand info. And the claimant might still be able to figure out, based on context, who ratted them out, right? So if it's a supervisor or a manager that wrote the statement, those are usually going to be your best bet. If it's a coworker, I would never send those, honestly. It's just not worth an unemployment claim for that kind of a scenario where someone could get, hurt or retaliated against. So be very careful with witness statements. So date, details of final incident, copy of the policy violated, their acknowledgement of the policy, and any prior warnings. The other thing is not to include, don't think that if something bad happened after you decided to terminate this person, that's going to be like your linchpin. So, like, let's say you terminated someone for attendance and they get mad um, in that meeting when you're telling them that they're being terminated, and maybe they threaten you or they throw a chair across the room or something like that. Okay, you can add that in at a later, like as a separate detail to kind of lend to the character of this individual, but absolutely do not list that as the final incident because maybe you're like, well, man, we're really going to win if we use this. No, you'd already decided to terminate them based on attendance. That is the final incident. Anything that happened after that, you can provide that as sort of supplemental info, but do not consider that to be the final incident. You know what? Actually, I do want to say one other thing about corrective warnings or corrective statements. Have a witness present when you give those warnings if you can, because a lot of times the employees won't sign them. You need to prove that the warning was given to the employee. And so if the employee says, I was never warned, I never got this warning, and if they won't sign it, it's a really good idea to have another supervisor or manager that is witnessing the corrective actions and the warning so that you kind of have that proof that it was given. Another thing, and this is what I would suggest, is if someone won't sign a corrective action notice or a warning, try some backdoor approaches, like ask them to write, I disagree with this, and initial it. A lot of times they think if they sign it, it's an admission of guilt, but that's not it at all. They're really just signing to acknowledge receipt of the document. You could also add something above the signature line that says, I'm signing below as just to show that I've received this. We've had this conversation, not as admission of guilt or something to that effect. Or you could just, write employee refused to sign, ask them to initial it. Again, if they won't do any of those things, okay, have a witness there, another supervisor or manager, HR person, something like that, and you can get around those. But you will have to prove that the person was given that warning. And even verbal warnings are relative. They are good. Like if you give someone a verbal warning and it's just like a discussion you had, you don't have to give them a piece of paper or make them sign anything, but you do need to document it and make a note of it in their personnel file. The date that you had the conversation, what was discussed, what did you tell them would be the follow-up to that if it were to continue, the behavior was to continue. And, just basically what happened on that day when you had that conversation, the date, who was involved, all of that. Make a note of it. The employee doesn't need to know that that's being noted in the file. You can tell them that this is just a verbal, but you might need that information, a year later. Or you might not be there when the claim comes in. Maybe you've gotten another job and another supervisor is going to have to pick up where you left off. So make sure that your details and your documentation there can support a claim regardless of who needs to participate and send in this info. So back to that question earlier, if you submitted these things timely based on the initial request from the state, you will be considered to be compliant. You will not have any kind of penalty. If you don't get back to them on that 24-hour follow-up, state call, what have you, they may or may not rule in your favor, but at least then if they don't rule in your favor, you can still go to a hearing and you can tell them that 24 hours wasn't enough time and you provided everything up front. This is what you know to be true, and you'll be fine there. So it is an unfortunate thing that they don't give you a lot of time, but as long as you've provided all these things at the initial claim, which you should have more than hopefully 24 hours unless the mail gets stuck, which also happens, then you should be okay. All right, before we move on to quits, I see a couple questions, so let's talk about those real quick. Why is substandard poor performance not a discharge? It is a discharge. It's just not misconduct. So, and I think you probably posted that before I kind of went into the details on that. But it is a discharge. It's just that the burden of proof is on the employer, and you have to prove that it was for deliberate misconduct. So again, you made a good decision to terminate them, but if you hired somebody that was a poor fit for the job, it's a qualifying separation. They will get unemployment. Is California a 30-day employer state? No. California is a proportional state. They will, that example that I gave, where they charge each employer proportionately, is California. If anyone has any other state specific questions, feel free to email me later and I will get back to you. Is documentation via email adequate? Yeah, I mean, I think so. It depends on what we're talking about here. I mean, you're going to have to prove that they got it or that they read it. So maybe if you have read receipts or something to that effect, um, that would be helpful. But I would say that yes, email is a very common form of communication these days. But again, the burden of proof, if it's a discharge, is going to be on you. So you just need to be prepared to meet that burden. All right, good questions. Moving on to voluntary quits, much easier. Voluntary quits, the burden of proof is going to be on the former employee. They're going to have to prove that they quit with good cause attributable to the employer, right? So what's considered good cause, right? So a change in the condition of employment, that could be considered good cause. Um, or maybe like that would be like if you change their hours or their pay significantly, or something like harassment or hostile work environment. Um, so let's talk about good cause first of all. So let's say you hire someone to be a bookkeeper. And I know a lot of times in these very small nonprofits, people wear many hats, and there's nothing wrong with that. But let's say you hire someone to be a bookkeeper, and then the receptionist just quits without notice, and you ask the bookkeeper, "Hey, could you help cover the front desk or the phones, a couple, days a week or whatever, until we get the job replaced?" And that person could say yes, and that's fine. But if maybe that person has severe anxiety for whatever reason about talking to people on the phone and that sort of work, and that's why they're a bookkeeper. They like to be with the numbers and not with people. Um, if you force them to do that, or the only option is to leave or to terminate their employment, that would be considered a change of condition of their employment. You can't change their job duties. Um, in a significant way and require them to do that. Or maybe they work 9 to 5, Monday through Friday, and you're like, hey, we're going to need you to start working weekends, or we're going to need you to start working nights, or whatever. If you change the condition of employment, depending on the scenario and how reasonable it was, that's all up to the state. You could be considered, it could be considered good cause. Now, on the harassment or hostile work environment, the key there is that it had to have been unaddressed, right? So if someone reports to you that they're being harassed or there's a hostile work environment and you don't do anything to fix that or try to fix that, then of course that could be good cause. But in most scenarios, right, if they report it to you, as long as you take the appropriate actions to try to make a better, environment for this individual, if they still decide to quit, that's not going to be good cause, right? They're going to have that burden of proof there, and the state does not expect you to be able to meet everyone's make everyone happy, right? But as long as you can show, but this is why you've got to document everything, that you did an investigation, that you addressed the scenario, and what changes you put into place to make life better for this person, and they still decide to quit, that's on them, right? The key is they had to have reported it. So unreported harassment or hostile work environment is not good cause. Another thing, this one's a little frustrating, but it just is what it is. There are some voluntary quits that the state could consider to be good cause that aren't your fault as the employer, but it's a regulation issue and they're going to allow unemployment benefits if they voluntarily quit. So some of those, and it varies by state, but the most common ones that are probably going to be like in most states would be, say they have a spouse that's in the military and they get moved to another post or another state. The state is not going to require this individual to stay at their current job while their spouse leaves and moves away, and they're required by the military to move, right? Now, there's a lot that goes into that other than just they get unemployment, right? They still have to be meeting all of the other requirements. So, they had to have taken all measures to try to preserve their job before quitting, just like reported harassment, they have to report it, right? They have to ask you if they can work remotely. Is a transfer available? Is there another location in the state that they're moving to, right? Those would be the initial steps. And then if those things are not available, when they get to their new state, they have to be actively seeking work. They had to have worked long enough to qualify. They have to be physically able to work. They have to be available. So they still have to meet all of the requirements, but the state is usually going to allow them to collect in that scenario, even though it's not your fault as the employer. Another one would be if they have to flee the area for a domestic violence situation. They're usually going to be allowed, again, provided all those other things have taken place, they're going to usually be allowed to collect benefits. So those are just some examples, but just know that these are regulatory issues. So if you get a decision back and the state cites it, that their regulation states XYZ is good cause, you're probably not going to have much leg to stand on unless the facts are conflicting, right? Um, Last but not least, we already kind of talked about this. Remember that continuing work must be available. A forced resignation is a discharge. Okay. Again, you can put it as a quit. You can allow them to resign. But when it comes time for the claim, you have to tell the state that continuing work would not have been available. You have to tell them that it was a mutual agreement, that you were going to terminate them if they hadn't quit. It wasn't working out. You allowed them to resign. Because either way, the facts are going to come out and it is going to be a discharge. Now, that doesn't mean you can't still, if there was misconduct, you can still win the claim, but just know you will now have the burden of proof. It will be a discharge, and that will be the flow of the claim. It will not be adjudicated like a voluntary quit. So, effective documentation. You don't need a whole lot, honestly, to be compliant, like the base requirements to be compliant with the state laws is simply the dates of employment and the reason provided by the employee for quitting. Now, is that best practice? Not necessarily, but that's all you have to have to be compliant. I, however, would recommend always requesting a letter of resignation. That could be anything. It could be a letter, it could be an email, it could be a text message. Um, if they won't provide something in writing, make sure you write down the reason the person gave you, who they talked to, what date, have all of that in your arsenal, because you would not believe how often the claimant gives the state a little bit of a different reason than they gave you for why they're quitting. So make sure that you are documenting those things. Try to get it in writing in any way that you can. That would be best practice. Also make a note of notice periods. So if they gave 2 weeks notice, make a note of that and whether or not they worked it or were allowed to work it. If someone gives you 2 weeks and you terminate them right away, which is not that uncommon, please know they will be allowed to collect for that 2-week period. They may not be able to collect after that 2 weeks because they gave notice and they were quitting. But if you terminate them early, pardon me, the state will usually give them benefits for that time period. So just know that. And then also, if they gave you notice and they didn't work the notice, make a note of that. So that can be really helpful. Again, it's not required, but these are helpful things that are best practices. Another best practice are exit interviews. When you have the opportunity to have a conversation with someone and talk about why they're leaving, a lot will come out in that discussion, and they can be really, really helpful when it comes time for an unemployment claim. And then the last thing is just a note, and I've kind of already mentioned it, but if there was job dissatisfaction, issues, anything that was going on, harassment, anything like that, just make sure that you're documenting any sort of investigations or issues that are going on with that and anything that you did to try to potentially resolve that for the employee. Because again, it's all going to come down to, who has a more credible story, and did the person have no choice but to quit? Oh, you know what? I want to tell you a story. This actually happened. This was a really interesting one. We had a case, this was very recent, in California, where the claimant was, they thought that they were due for a promotion and they really, really thought the job was theirs. And the employer ended up hiring someone that was different from a different department for the promotion. And so the employee was very not happy about this, right? That already upset them. Well, then in addition to that, this new supervisor or whatever, I guess they weren't really getting along. She now had to report to this person whose job she thought she should have had. And when, she got her first performance review from this individual, it was not good. And the employee appealed it and was like, I've always had good reviews in the past. And I feel like this was unfair. And the employer, it actually got escalated up, and someone higher in the ranks agreed and reversed it and said, "You're right. We're going to reverse that employee appraisal rating, and we're going to adjust it." Now, she still didn't get the promotion, but the employee wasn't happy with that and quit anyways. And this one went all the way to a hearing, but the state ultimately said, "Look, yes, your initial supervisor, um, you may not get along, and they may have given you an unfair performance appraisal, but the process worked. And your employer has a process in place to try to resolve these issues, and it was resolved to your benefit, and you chose to quit anyways." And so they did not give that person unemployment, even though you could see how, in a pretty toxic situation, you have to work for somebody that unfairly graded you, and you have to continue to work for that person. You might be frustrated too. But the point is that the employer did the right things. They took the right steps. And you don't always have to please everybody, but you do have to make an effort and document those efforts. And so it was beneficial in this employer's um, situation, and this person was not allowed benefits. Okay, so let's talk about lack of work. Lack of work. Oh, actually, you know what? Before I move on to lack of work, let's go back to quits. I want to talk about job abandonment really quickly, because this sometimes can go either way. Let's talk about no call, no shows. So most states require 3 consecutive shifts of no call, no shows in order for it to be job abandonment. Okay. So if someone only no call, no shows one time, and that's the only date that you write down, most states are going to consider that to be a discharge. Okay. Now, if they've got attendance issues, they were on their last morning and then they no call, no showed, that's a policy violation. You're going to probably win that, but it's going to be a discharge, right? So you're going to have to provide all the warnings and everything. But if this person is no call, no showing and they just never come back, write down 3 days that they were scheduled to work and that they did not show up, so that it's in the record, so that you can show that this person successfully like abandon their job, right? Essentially, if you just give one date, the state will not consider that to be a voluntary quit. It has to be 3 days. Now, there are at least 2 states that require 5 days. So I know that Alabama and New Jersey require 5 days. So if you're in one of those states, document 5 days. But basically, you want to document in there all the days of no call, no show, and that, after 3 to 5 days, you can just say they never came back. Maybe send them a letter, certified mail, or a read receipt email to their personal email, or however you want to do it, to say that you're accepting their resignation, job abandonment, that sort of thing. That will be really, really helpful. But just know, one no call, no show is not a quit. That is going to be considered a discharge. You got to document the specific dates. The state will ask for the specific dates that they did not, the 3 specific dates, 3 to 5, that they did not call or show for. Okay, let's talk about lack of work. So lack of work is the entire intent of unemployment, right? It's not disqualifying. If you lay somebody off, whatever, eliminate their position, they're going to get unemployment, rightfully so. But there are some scenarios that are going to be adjudicated as a lack of work, but there are some strategies that you can use in certain scenarios to combat some of these things. And so I want to walk through some of those things. So the first one I want to talk about, let's talk about part-time workers. Okay. So under the part-time umbrella, the states have generally defined 3 subcategories of employment. So as you can see, those are regular part-time works all available hours, and on-call. So while you as the employer might have your own definition of these, it's important to understand the state's definitions. So the state is generally going to define regular part-time as a worker who works less than full-time, but has the same schedule every week, okay? With very minimal exceptions to that. So regular part-timers are typically not going to be eligible for unemployment benefits. I say typically because, as we all know, there are some state exceptions that we could never go through in an hour-and-a-half webinar. But in most cases, regular part-time, you're going to be fine. So if you hire someone to work 9 to noon every Monday, Wednesday, Friday, or just maybe it's just 3 days a week, and it's always 3 days a week, those hours, you're going to be fine. The state doesn't want to see large fluctuations in hours or wages. Okay. So in order to be regular part-time, which is potentially protestable, it's got to be the same schedule or basically the same hours roughly every week. No major shifts. But then we've got works all available hours, and that's going to be someone who's less than full-time, but their hours fluctuate based on business needs. Now, of course, the key is that they have not put restrictions on their hours. So if they're accepting all available work and their hours go up and down and fluctuate based on what's going on, they could be eligible for partial benefits. It just depends on the scenario, how much they're earning, if it fell below a certain level. The key here will be whether the employee is dictating, the employer is dictating the fluctuations, or if the employee has placed restrictions. So that is, really, really important. If you've got more hours, but the person's like, yeah, I'm going to night school, I can't really work those days. That would be them putting restrictions versus like, hey, I'll take all the work that you offer me. Those are two different scenarios. And I would say works all available hours probably applies to most people on this call versus regular part-time. Works all available hours is generally not protestable, but I'll give you some caveats here in a minute and some ways to sort of manage that. Then we've got on-call, which is just going to be assignment-based work, people who work as needed, substitute teachers, in-home care workers, anything like that. And as long as they're not refusing work and they're accepting assignments, right, they're usually going to be eligible for benefits. Those things are usually not protestable. So what are the things that are protestable when it comes to lack of work? You can protest regular part-time, or you can protest availability. And there are a lot of things that fall under availability. So let's talk about some of this stuff. All right, so regular part-time. Let's put that one to bed real quick. Again, if it's regular part-time, all you need to do to protest the claim is say that they are regular part-time, nothing has changed. They generally work the same hours every week. Any lack of hours was on their part. They have restrictions, or this is what was agreed upon at the time of hire. Just make sure that if there have been any changes, that you get those availability changes in writing so that you can offer some explanations as to why their hours have changed. But generally, most states, you can protest regular part-time work. All right, so let's talk about availability issues. Okay, so what's an availability issue? Availability issue is you've offered this person work and they haven't, they're not accepting it, right? So if you have seasonal, well, let's go back to on-call. Sorry. So on-call or casual workers, like let's say you have substitute teachers, or in-home care workers, right? These are the ones we most often see it with. So they finish a work assignment and maybe they file for unemployment benefits, and you get the claim and you're like, yeah, it's lack of work, right? The assignment was over. But then later you offer them a new assignment and they're not accepting it. Maybe they're like, yeah, sorry, I'm going on vacation that week, or I'm busy, or I can't take that job. It's actually up to you to provide that subsequent info. And as a customer of ours, there's a really easy way in the Shield portal. There's a link on the left side menu in Shield that says, do you need to report a refusal of work? That's where you would go in, because there's no claim anymore to answer. You've already said it's a legitimate claim. They finished the assignment. But you can go in and provide the refusal of work information in that system so that you can tell the state, hey, they no longer are meeting the requirements, right? Or if the person has requested a reduction in hours, you would want to provide that with the initial protest. Anything that is showing that they are not meeting the state's availability requirements. Now, just so you know, you may not get a decision on that because that's actually considered an issue between the claimant and the state. The employer generally is only a party to the separation reason. All those other things that are required to be eligible, like availability and things like that, um, are between the state and the claimant. So you can offer that information as like a protest. You may not get a decision on that, but the state will review all of the information and determine if they're meeting the requirements, and subsequently disqualify them, if needed. So when it comes to availability issues, I know it's probably a lot of work, but you want to document all offers or refusals of work, especially for those individuals that might be trying to work the system a little bit. So if you have like substitute teachers, if you have in-home care workers, things like that, or people that just work on call, just make sure that you're keeping records, some sort of an easy way to track and document those things. And if someone, again, requests to change their availability, make sure you get that in writing. And then another strategy is to offer hours and assignments to those who have filed claims first. So this is a huge strategy point. So if, you know, as assignments come up and new work is available, look at the individuals who have recently filed claims, and those should be the people that you reach out to first to offer these assignments to. Because best case scenario, they go back to work, they stop collecting, and you fill the assignment, or they refuse, and you can report that and get a disqualification. So you use it kind of like use your unemployment claim list as kind of like a recall roster. That's what temp and staffing agencies do because they get so many claims for completed assignments, that they basically run reports every week who's recently filed, who's collecting, and they use that as their list of people that they should target first. Same thing for seasonal employees. You can do that if someone completes a temporary assignment and you've got new work, feel free to reach out to that person, and offer them work if they filed a claim. They don't have it has to be similar work, similar nature to what they're qualified for. But again, if they refuse that, you can report it and let the state make a determination on whether or not they're refusing work or not making themselves available. Oh, another thing, summer camp employees, and this is a big one for a lot of our nonprofits. So if the states that I know of 13 states that have this provision, okay? This is sort of like a deeply rooted thing, like in the payroll rules. So, and I'm not a payroll expert. These are just the ones that I've come across in my time, but in the rules about what is considered covered employment for unemployment versus non-covered wages, there is a rule about summer camp employees. So if you're in one of these 13 states, and maybe you should investigate your own state as well, look in the state statutes about covered employment, and you have a summer camp that operates less than 7 months a year, you employ these individuals less than 13 weeks, and they're a full-time student, they are not qualified for unemployment. And the key here is that you do not report their wages on your unemployment reports. The same goes for if you hire like government relief workers, um, AmeriCorps, that type of thing. That's another one that not eligible for unemployment. But what we see happening sometimes is that employers don't understand and they are reporting those wages as qualified wages. And if the state sees wages and the assignment is over, it's a lack of work, they will be eligible. You will not get around it. So you have to remember and know your state payroll rules. And again, I'm not a payroll expert, so I can't always help with the payroll questions. I do my best. But you need to be investigating your payroll rules about what should be reported to the states for payroll and what should not be. What is covered, what is not covered. If you report them by mistake, they will be eligible. So just a key benefit there, or a key issue there. And on a similar vein, understand your state's severance rules. They vary by state, and how the severance is paid can make a difference. So whether you paid in a lump sum or continuing payments, depending on your state, that could make a difference. If your state doesn't consider severance to be reported or covered wages, then again, make sure you do not report the severance wages on your quarterly reports. We had an example in California where there was an employer that didn't realize that, so California does not consider severance to be wages, period. So it doesn't matter how you pay them, when you pay them, how much you pay them. The unemployment office is not going to consider severance when making their unemployment ruling. Okay. But here's what happened. This person filed and they collected for their full year, which unemployment generally is good from 1 year from the date they filed the claim or until they hit their max liability. So this person hit their max liability. When the 1 year was up, they were still unemployed and they filed a new claim. And when they filed the new claim, there's a new base period. Now, based on the dates of when this person filed, when they were separated, you get the drift. This employer should have had no wages in the base period on this second claim and therefore should not have been chargeable. But what happened was they reported the severance. The severance was paid out late because there was, some sort of a situation going on. Maybe there was a lawsuit. I don't know. But there were several months in lag on paying out this severance. And when they paid the severance, they reported it. Their payroll company included it as covered wages to the unemployment office. So now this person requalified for unemployment benefits against the same employer using the separation payments, severance payments, as their qualifying wages, and that should have never happened. So in order to fix that, they would have to go back and amend those old reports and make the wages zero, thus making them unliable for the claim. So just make sure that you know before you structure your severance agreements, understand what your goals are for your organization and how your state is going to apply that to unemployment benefits. So again, depending on what your intended goal is for the separating employee, would define how you would handle severance, and just make sure that you understand again whether or not severance is considered to be covered wages. There are some states that do not consider it wages for the purposes of paying benefits, but they do consider it wages for the purpose of, reporting and qualifying. So it's really tricky and you just have to know your state's rules. So just make sure that you're on top of that. Um, and then last but not least, for lack of work, sometimes we have to lay people off. We got to let them go, and there's no way around that. But one way to reduce your liability is to use reemployment services. Every one of our members has access to these services. It's included in your membership fees. We use a company called NextJob. And basically, if you have to separate employees, please reach out to us. We will ask you just have to provide some very basic information to make sure that the individuals qualify. But you can have up to 20 free one-on-one job coaching and reemployment packages a year at no additional charge. And you have an unlimited amount of access to the online resources as well. And you can actually provide those to any type of separation, not just layoffs. So the upgraded packages are for layoffs really only, and or no misconduct, I would say, and they have to meet certain criteria, and you get 20 a year. But for like the other resources that are provided by this company, you can provide those really to anybody if you like. You could use those on a case-by-case basis, but reemployment services are very helpful. They sort of reduce some of the anxiety for that employee when they're looking for their next opportunity. And it has been shown to reduce the amount of time that someone stays on unemployment, and therefore is going to reduce your liability, and will save you some money. So this is a benefit to you if you're a member of our, which you should be if you're on this webinar. So take advantage of those services should you have to have the unfortunate event of laying someone off. So I'm just going to go really quickly through some tips and appeals for hearings, and then I'm going to do the questions box. The reason I don't spend a lot of time on this is because you're a member of our services, you get hearing representation included in your fees. So I just highly recommend use the hearing representation services if you can, if you want to. That means that someone is going to attend and participate in the hearing with you. It's very helpful to have someone experienced, unless you feel like you've done this enough and you want to do it yourself, that's fine too. But they're going to prep you. They're going to go through all the tips. They're going to make sure that all the documentation is provided, submitted. They're going to go over who's going to do the closing statement, what facts you want to focus on. So I don't have to go through this a lot. The main thing I want to say about unemployment hearings is firsthand testimony is crucial. Okay. If you think you're just going to send your HR rep and the supervisor that was involved in the final incident isn't attending, that's going to usually be secondhand testimony, whereas the claimant's going to always be firsthand testimony. So anytime you're able to have the firsthand witness attend, do so. The other one is to remain calm. These hearings can be frustrating. You might have a biased judge, might be cutting you off. They'll claim it could be blatantly lying. Um, what I would say is have a notepad handy and a pen. If the claimant makes statements that are false, something that you want to rebut or come back to, just make a note of it. And when it is your turn to talk, make sure you circle back and rebut that. Just like they do in the debates, like the political debates. It's kind of annoying when they like just go off topic or whatever, but they will use their time to rebut something from a prior, even though the question has changed. You can do that in unemployment hearings as well. So make sure you get your voice heard. Make sure you rebut statements that are false, but do not interrupt. Wait for your turn. Unlike the politicians, wait for your turn. Don't interrupt. And then just make a note of it and you can come back to that. But stay calm, address only the facts, try to really summarize final incident. Here was the policy. Here was their prior warnings and why we made the decision to terminate them. You want to be very factual. And of course, offer a closing statement to summarize because things can get kind of muddied. And you really want to reiterate these points. But again, your hearing representative is there to walk you through all of this, to prep you. So that's why we're not going to spend a whole lot of time on this, but I did want to at least go through some of this. Now, I'm going to go over the questions in the questions box because I know we're like running out of time here. And I think we got a couple more. But remember, my email address is ncorn@501c.com. So if you have questions that you need to ask us, reach out to your client service representative or me here at 501 or your claims rep at TNC. Any of us, we work together as a team. We'll be happy to help answer your questions. Again, if you're looking for those SHRM or HRCI credits, you just have to fill out the survey that you're going to get sometime after the webinar, and you will get copies of the slides. Okay, so does relocation only apply to military? No, in some states, if they are relocating with a spouse that had more, and I can never say this word, remunerative employment, meaning it was a better opportunity for their family. A lot of times the state will sometimes allow benefits there too. Again, the burden of proof is going to be on that former employee though. They're going to have to show that they really had no choice to move and that they took all reasonable measures to try to stay connected to their current employer, such as, again, requesting transfers, remote work, that sort of thing. And then also meeting all the requirements once they get to their new location. And again, it's just going to depend on your state and how they look at that specifically. Do no-call, no-shows have to be consecutive? Yes, they do. To be job abandonment, they have to be consecutive. To be a discharge for attendance? No, they don't have to be consecutive. And you're likely to win a discharge for attendance if they no-call, no-showed, right? But if you want to call it a quit and you want to call it job abandonment, which is going to be the easier case to win, they do have to be consecutive. And then last question. I think on a previous slide, you mentioned temporary employees. Who has the burden of proof if an employee files after employment is terminated? Does it make a difference if in the hire letter it states an end date? Here's the thing. It doesn't matter if a job, so even if the person comes into the job and very well knows it is temporary, seasonal, or contract work. So, retailers often hire Christmas help. And at the end of the Christmas season, they know that their job is going to be over. Guess what? They can file for unemployment. The states do not penalize people for accepting temporary work. They want people to accept work and not discourage them to accept work just because it's temporary. Now, they do have to still meet all the other requirements. So once that temporary work is over, they can file and they have to be meeting all the requirements. They have to be eligible. They have to be looking for work. If you've got other work, offer it to them. Because again, nothing is preventing you from doing that. But simply stating the end date does not prevent you from paying unemployment. Temporary assignments are a cost of doing business. If you hire temporary employees, you are liable or could be liable depending on when they worked for you, what state you're in, whether you're in the base period. If you can hire, like in the summertime, if you can hire full-time students and they're going to go back in the fall, that's a great scenario because full-time students are typically not going to be eligible for unemployment because they're not available for full-time work. So, but yes, simply stating the end date and that the person knows that it's the end does not make them ineligible for unemployment. They will be eligible. Okay, so I hope you learned something today. And I know that this does not cover all matters of, every state. There's no way we could possibly do that. This was meant to be a high level overview to give you a foundational and educational understanding of how unemployment works, to help you have some tips and strategies for managing your costs. We don't expect you to memorize any of this. We're here for you. Reach out if you have questions. We're happy to go over anything that you need help with. And so with that, I'm going to end today's webinar. I hope you have a great rest of the day. And I hope this was a good use of your time. Have a great day.